But let's go across to Manisha Gupta now. She'll tell us about the commodity space and what she's watching over there. Manisha, over to you.
Thank you for that, Sonia. Well, I'm looking at profit-taking across sectors when it comes to commodities. And, well, yes, why not? Because we've seen most of these commodities go dangerously overbought. And now there is some healthy profit-taking coming in. I want to take a look at the precious metal prices, where we have seen gold and silver both decline quite strongly in the overnight markets there. If you look at the gold prices, we saw a decline of 2.5%. And the silver prices fell 5% as well. So this is the biggest one-day drop that we've seen in 3 years, especially in case of gold. So it has retreated from its all-time highs. In sense of numbers, when you look at it, the silver prices did touch a 3-year highs at around $28.9 an ounce. It's come down to $26.9 an ounce in the international markets there. And a sharp fall is what we are looking at in the Indian markets as well. For the gold prices, it has been more than $100 of a decline. So from a high of $24.20, we are trading below $2300 right now. So a sharp cut coming in there as well. Well, some of the reasons that you've seen this profit taking coming is one, investors are taking profits and the portfolio managers also repositioning themselves with the kind of value increase in their portfolios because of gold is what they saw. The second point really is about the dollar index and the US yields, which have jumped quite strongly at 106. It's a 5-month highs for the dollar index, with expectations that you could be looking at higher highs because the US data has been on the stronger side. And then it has been about the US Fed officials also suggesting that the restrictive policies could be prolonged and the first rate could actually come in by the month of September. The street is also looking at the Middle East tensions, which have kind of de-escalated. We've seen Israel a restrained response to what Iran did, and the kind of conversations and statements that came in from Israel and Iran also have taken some geopolitical premium off the prices there. Well, there are concerns over vital Middle East conflict even now, and is the reason you could see some support coming in at these levels. But the markets also have reacted to the 2 CME margin hikes that we saw in case of gold and silver, and then trading curve that Shanghai also put across after that one-way rally that we saw in case of gold and silver. But interestingly, there is a report from Citi which suggests that a minor pullback in gold and silver is what you can see by the time second quarter ends. But for the second half of this year, they still have a directional highs expecting in case of gold at around $2,500 an ounce. And for silver, they're anticipating $30 to $32 an ounce on the higher side. So the direction hasn't changed. This is just a profit taking.
All right. Thanks a lot for that.